Hello, I'm Robert and welcome to my channel, where I discuss everything automated algorithmic trading, or simply algo trading. Today we are looking at my live account. The market has been in such a beautiful way that I have managed to sell off everything I was holding and got back in it. I call this a cycle when I sell off what I'm holding. So I have started a new cycle, which is what we are going to be talking about today. It's rare when I get to see an opportunity like this so vivid, and I wanted to bring out exactly what I talked about in a previous video, where I could take losses constantly and still make money, and in fact where I deliberately take losses. So let's get straight into the chart and into the numbers and look at what we are talking about. As we look at the chart, right here is the actual number of positions I am currently holding. These are all open trades waiting to either be liquidated through a loss or sold off. Now, the important part of this transition is to look at how I have structured my trades. The first in, first out regulation requires that every trade be a different position size. So you can see that I have most of my trades in 1 unit increments increasing. But the last trade is only 90 units. Why? Well, that is because of reduction. Every time I make a profit, I reduce the oldest trade in my set by 1 unit. Every time I make money trading, meaning one of these positions sells off, the oldest trade is reduced by 1 unit. And by the looks of this chart, I have actually made 60 profits since this cycle started. And that can be seen because if we look at the trade here, it's at 152 units. So that means that the trade below it, the trade in question, had to start at 151 units. And I have substantially reduced it 1 unit at a time to get it to its current point. So in 90 more profits, this position will cease to exist, and the 152 unit position will become the oldest. This is how I make my grid float, by burning away the oldest position with every profit. As the market moves, so does my grid. The emphasis for this technique is specifically a risk mitigation approach. It's designed solely to take out losses on my terms. In this case, my losses are 60 direct and deliberate losses for 60 direct and deliberate profits. Now, the way this works, if we look on the left-hand side where you actually see my profits, we can clearly see that for every profit, I have an associated loss. And that is exactly what we are looking at. For a profit of 161 units, I made 15 cents. But right after that, I deliberately took a loss of 1 unit for 1 penny. That transition, that scope, gives me a way to methodically and consistently mitigate my risks by taking a loss every single time I take a profit, I am burning off the oldest position in my grid, and I am walking away with money in my pocket. So as we can see with the buy entries, that is selling, because I am shorting this market. Every time I make a profit, I make a loss. Every single time. 60 times, in fact, since this cycle started. And that is really the most critical point of sustainability. You are going to take losses. There are no exceptions to that. Absolutely, unequivocally, you are going to take losses. What you can change is how you take those losses. You can take them as a constant, as I am doing, 1 unit at a time, or you can take them as a stop loss when the entire market moves against you. But either way, you will take them. So let's get into some charts I've prepared and talk about this. Because we can clearly see I have losses. But what does that look like on the equity chart? And what does that look like on the trade chart? Let's go find out. Okay, here we are on the equity chart. And it looks very generous. Since roughly September 10th to now, this bot has made $40. It's reasonable, it's nice, it's consistent. But where are the losses? We know I took the losses because we saw it in the real account. Why aren't the losses showing up here? They are, and they are looking straight at you through this chart. You can see on this chart 60 different losses. They're standing out there in plain sight. So let's zoom in and actually take a clear look at just exactly where these losses are. So let's start by zooming in and then seeing just how these losses look. Now we can already begin to see them very visibly and very clearly. They look like little barbs on the chart. For example, right here and right here and right here are good examples. But let's get in closer and really see just how this looks. Now we can really see these losses or these barbs as the equity line clearly displays them really well now. You can see every time there's a barb, this is one loss for every profit. So right here, looking at this chart, for today, I took 6 profits so far. And I took 6 losses. It's that simple. Let's go in a little further and actually get a better look at what these look like in the price chart. As we can see on the left-hand side, over here, we have the price scale. So it's easy to see how these barbs or losses look within the pricing. And we can actually get an idea of how 1 penny does affect the price movement when I'm making a 10 to 15 cent profit per trade. So my net is very clear and obvious each and every time. And if we put the chart into panning mode, Now I can actually go through and begin to slide and follow the equity curve, where you can even get a sense and scale of how long I hold some of these trades. And you can see every single trade has a definitive and distinctive barb to it. Sometimes the trades don't look overly profitable. Sometimes when the market really shines and we get a huge drop like we did today, then the prices do exceptionally well. And of course, when you're dealing with the weekend, then you have issues of the long duration between cycles when you're looking at the market in this order. But nonetheless, we can clearly see barb after barb after barb, loss after loss after loss. This is really critical, and this is my secret to success. By burning off that last entry, one profit at a time, I am automatically building in a very good resiliency for whatever the market does. By understanding how the market works, and by allowing myself enough breathing room for the market to move in the short term, I can burn off that last position and move with the market over and over reliably well. Now let's look at the actual trade chart. This is the trade chart since the market started. Now we have the candles and we have the profits from the trades. And we can see how the various parts of the market work, particularly when you look here and you see that there's no real grid structure. It's just the bot selling off rapidly as the market tumbled downward. The grid structure does take effect though, as we see here, and we begin to see the cascading transactions take place. But we also see close-ups of the reduction process. For example, let's zoom in here. And we see these faint blue or teal lines. For example, right here. These are the reductions. Every time the bot took a loss, these lines show exactly how that shows up. So we can actually see a clear representation of just how that process took shape. So let's zoom in to this section a little more. And now we can really see it. One reduction by itself really doesn't show up very clearly. But as we can see from the apex point, the point of the original purchase, we can clearly see just how that is showing up on the chart through the way I have graphed this structure. This really is where the rubber meets the road in your trading, by being able to see how the market works and fluctuates in a real-time procession. It becomes a clear and distinctive motivation for what we have. And let's put it in panning, and we can even move through and see other trades. Now you'll notice here that the lines don't show up very clearly, and that's because there's not that many of them. The way I set this chart up is it really only becomes visible when you have a large number of reductions. So as you are progressing within your data set, the actual number of reductions helps make the process more pronounced and more visible. And that's really an intuitive way of looking at the data and the chart that's not overwhelming. Because you can see as we progress backwards, when the market was moving downwards and I was profiting, you don't have the reductions because I was literally burning off all of my positions. But over and over, we can see clearly the impact of what happens when you have large numbers of reductions. And that really is the entirety of the whole process. So let's now go back to the total chart, and you see my stop losses where I didn't use reduction on this account, and you see where I did. Reductions are a critical point, and they are very clear in terms of what happens when trading requires a careful thought process. Now let's go to a chart that everybody wishes they had. Okay, looking at this chart. This is a demo account. And one of the lessons in reduction that I got early on, where I wish I had known then with my real account what I know now because of this account. So here is the equity curve. And since I started this account, it is up $400. Now let's look at the actual trades. Here is all of the trades. Again, the blue or teal lines are reductions. And you can see just how powerful those reductions are in the scale of the entirety of the account. Early on, you see where I took stop losses. I added the reduction to test the theory. And now you see the impact of those reductions as they really drastically altered the layout of the account. Since reductions on this account, it has not taken any losses at all. And this account actually started with a demo balance of $5,500. That's really not bad, especially now that it's up $400 in pure profit. And that's not including any negative interest rates it might have earned along the way. And this is a reasonably safe and stable approach. It works well. It works realistic. And it provides a consistency that is attainable. That really is the whole point of what sustainable trading is about, and how reduction, how deliberately taking losses along the way for every single trade can actually give you better profitability in the long run. Every single trade took a loss. And we can actually see that by going back to the equity curve and doing what we did with the other one, zooming in. We can start to see it, but let's really blow this up. Now we have a clear view of the barbs. A clear view of every time I took a deliberate and intentful loss. Every little dip. All of these reductions helped make me money. Every one of them played a part and keeping this account profitable. Literally, because of these reductions, I did not take a stop loss in the duration of those reductions. That is a critical point that must be kept in clear view. Reductions help mitigate risk. By deliberately taking losses along the way, by deliberately and intentfully, specifically focusing on when you should take a loss, you are actually making more money in the long run. You are providing a framework to protect your capital. And it does not necessarily show up on the long-term equity curve. But when you look at your trades individually, just as I did in my live account, you can clearly see every time these losses take place. If you want to be a successful trader, this is one of the many techniques that you really must look at. Focus on it, try it, test it out. I wish I knew this 4 years ago, because I would have saved a lot of money that I lost by not using this technique. Reductions are the ultimate way to take losses on your terms. They are pretty much the guarantee that you are going to be able to face the market. And if you've done your research properly and you understand your market, they can take you to the next level. Reductions aren't about getting rich quickly. They're not about gimmicks and games. They're about strategic, mathematical principles that function within the market that burn off your positions over time. So let's finish this discussion up with the live market. And let's actually go back and look at it. We can see as I progressed backwards, all the way back to August, and we look at the live market right now, we can clearly see the severe sell-off that reached the entire range that I've been trading. And this tiny little bit right now that I am now holding compared to what I have ridden through with the market with this bot. Use your demo account. Put this in practice. See how it works in the real world. Practice sustainable trading through responsible risk mitigation. So if you like this kind of content, hit that thumbs up button. If you're not subscribed, please subscribe. And if you want to see more of this kind of content, please join my Patreon and help support this kind of channel. You'll find all the links in the description below. If you have any questions or comments, please leave them in the comments below, and I will be glad to answer them. As we wrap up this video, always think about your risk first and ways to mitigate your risk. You can't stop the market from doing bad things, but you can challenge the market in a way where you decide when and how you take losses. Thank you for watching, and until next time.